Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada, so let's get started. Understand that the Bank of Canada will meet and announce their interest rate decision tomorrow. The expectations are largely for no change in policy. The expectations going forward are that, from economists at least, that the Bank of Canada will start to cut rates in the month of June. Money markets, however, are projecting in April a 70% chance of an April cut. So somewhere between, the April and June, I guess, is the idea for the Bank of Canada to cut interest rates. And that's just as a backstory to what is going on in the markets from a technical perspective. Now, of course, that decision will take place tomorrow at 10 a.m. and it will have an impact on the market price action at that time. So understanding what the technicals are saying is key to your trading in this currency pair, but understand the risks as well. So taking a look at the hourly chart here, what can we say? Well, the price has been trending through most of 2024. We did move up to a high price last week, however, and did correct lower. However, that correction to the downside did fall short of the 38.2% retracement. That level comes in at 1.3402, and the low price yesterday came in around the 1.341444 level. That level also happened to correspond with the high of this swing area going back in time. Number of different swing highs through here, forming this swing area, and then we moved to the downside here, only to return back up to that swing area through here, and here, moving back down to the downside. We did break above it here, but failed and rotated back to the downside, and then reestablished resistance here before finally breaking to the upside and trading last week, taking the price out to our high price of 135.41. Since then, we've retraced back to the break point here at the high of that swing area, and we saw a rebound back to the upside yesterday. Right now, the price is testing / breaking above the 200-day moving average. That's a green line in this chart. Also, the 100-hour moving average between 1.3475, 1.3482. Currently trading at 1.3485. So the buyers are making a play here in the dollar versus Canada if they can stay above the 100-hour moving average from a technical perspective at 1.3475. Then the bias remains tilted more to the upside. Of course, staying above the 200-day moving average would be even better. But if traders who like the upside, like the dollar, like selling the dollar versus Canada, you may even risk down to the 200-hour moving average. That's this green line right here. Admittedly, yesterday we moved below that level yesterday on our way to the high of this swing area, but then when we moved back above it, the bias turned more to the upside, with the sellers turning the buyers on the break above that level. That level comes in at 134.52. So, this area right here is really the support that, if it does hold support, you can argue that the buyers are more in control. If we stay above the 100-hour moving average and 200-day moving average, I would say that they own the control for sure. So I'll watch that level in the short term. If we do break below that 100-hour moving average, you could see a rotation back to the 200-hour moving average. So there you have it. Take a look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.